Imagine placing a single $1 bill on a table and asking one simple question: could this tiny piece of paper eventually become a fortune? Almost everyone would laugh. They would say you need a high-paying job, a brilliant business idea, or a lucky break to build real wealth. But Warren Buffett spent more than 7 decades proving that the greatest fortunes rarely begin with extraordinary amounts of money. They begin with an ordinary decision that almost everyone else ignores. And here's the strange part. The decision wasn't about making more money. It was about thinking differently about the money he already had. That difference sounds almost too simple to matter, yet it quietly separated Buffett from millions of people who worked just as hard but never achieved financial freedom. But before you assume this is another story about saving every penny, there's something even more surprising. Buffett wasn't obsessed with money itself. He was obsessed with what money could become if it was given enough time. That single idea would eventually turn him into one of the richest investors in history. But the first sign of that mindset appeared when he was still just a child, and what he did next reveals a lesson that most adults never learn. As a young boy growing up in Omaha, Nebraska, Buffett wasn't dreaming about luxury cars or enormous mansions. Instead, he was fascinated by a much smaller mystery. Why did some people always seem to have more money while others stayed trapped in the same financial cycle year after year? He began selling chewing gum door to door, then Coca-Cola bottles, then newspapers. On the surface these looked like ordinary childhood jobs. But beneath them was an extraordinary habit. Every dollar he earned wasn't simply income. It was potential. While other children asked what they could buy with their earnings, Buffett asked a completely different question. What could this dollar earn for me? That question sounds insignificant, but it completely changes the relationship between a person and money. And here's where the story becomes even more interesting, because Buffett soon discovered something about human behavior that still controls millions of people today. Most people don't lose money because they make terrible investments. They lose money because they never allow it to work in the first place. A paycheck arrives, expenses grow to match it, and whatever remains is often spent without much thought. The cycle repeats every month until years pass and people wonder why wealth always feels just beyond their reach. Buffett recognized this pattern long before he understood complex financial statements or stock valuations. He realized that spending isn't just the act of giving away money. Every unnecessary purchase silently destroys something invisible: future opportunity. But here's the question that completely changed Buffett's thinking. If $1 could become 2, and 2 could become 4, then what exactly was stopping that process from continuing for decades? The answer wasn't the market. It wasn't luck. It was something far more ordinary. Time. Most people think of time as something they spend. Buffett learned to think of time as something that multiplies. Imagine planting a single seed. During the first few months almost nothing appears to happen. The growth is slow, almost invisible. Someone impatient might believe the seed has failed. But beneath the surface, the roots are expanding, preparing for years of growth that cannot yet be seen. Investing works in almost exactly the same way. The earliest stages look disappointingly small, which is why so many people quit before the miracle begins. Buffett understood that compounding rewards patience long before it rewards intelligence. And that's exactly why his greatest advantage had nothing to do with having a higher IQ than everyone else. In fact, the advantage he relied on is available to almost every person watching this video. The surprising part is that most people refuse to use it. As Buffett grew older, the world around him became obsessed with speed. Investors chased the hottest stocks. Businesses promised overnight success. Every generation believed it had discovered a shortcut to wealth. Buffett watched these trends come and go, yet he almost never changed his philosophy. That consistency confused many people. How could someone become richer while appearing to do less than everyone else? The answer had nothing to do with working less. It had everything to do with avoiding unnecessary decisions. Buffett understood that every emotional reaction has a financial cost. Fear makes people sell too early. Greed makes them buy too late. Excitement encourages risk. Panic creates regret. But if emotions were the hidden enemy of wealth, then what was the hidden weapon? The answer isn't what most people expect, and once Buffett discovered it, his entire investing career followed a completely different path. The hidden weapon wasn't a secret investment strategy or access to information that nobody else had. It was emotional control. Buffett realized that the market constantly tests one thing above all else: your ability to stay rational when everyone around you is losing theirs. Most people believe investing is a battle against the market, but Buffett understood that the real battle happens inside your own mind. Every crash, every headline, every rumor, and every sudden price movement forces investors to make a choice. Will they react, or will they think? That distinction sounds small until billions of dollars are at stake. But here's what makes Buffett's approach so unusual. He never tried to predict what the market would do next. Instead, he focused on understanding what would still matter 10 or 20 years into the future. And that single shift in perspective gave him an advantage that most investors never develop. Think about how people usually make financial decisions. They see prices rising and assume they must buy before it's too late. Then prices begin falling, fear spreads everywhere, and suddenly the same people rush to sell. They buy confidence and sell fear, even though successful investors do the exact opposite. Buffett once explained that the stock market is designed to transfer money from the impatient to the patient. At first glance, it sounds like a clever quote. But hidden inside those words is one of the greatest financial lessons ever spoken. Markets reward people who can wait. They punish those who constantly chase excitement. And here's the fascinating part. Waiting doesn't feel productive. It feels uncomfortable. That's exactly why so few people are willing to do it. Buffett often compared investing to owning a great business rather than trading pieces of paper. When he bought shares in a company, he wasn't asking whether someone would pay more for them next week. He wanted to know whether that business would still be creating value 10, 20, or even 30 years from now. This way of thinking completely changes every investment decision. Suddenly, daily price movements become less important than the quality of the business itself. Instead of asking, "How much can I make this month?" Buffett asked, "How much value will this company create over decades?" That question sounds simple, but it quietly filters out thousands of bad decisions. And yet, even after understanding this principle, many people still fail to build wealth. The reason has almost nothing to do with investing. It has everything to do with lifestyle. As income grows, expenses usually grow even faster. A better salary leads to a bigger house. A bigger house leads to higher bills. A promotion leads to a more expensive car. Before long, people earning six figures often feel just as financially stressed as they did years earlier. Buffett noticed this pattern again and again. He understood that wealth isn't measured by how much money comes in. It's measured by how much freedom remains after your spending decisions are made. That's why, despite becoming one of the richest people in the world, he continued living a remarkably modest lifestyle. To many people, that seemed strange. Why would a billionaire avoid unnecessary luxury when he could afford almost anything? The answer reveals something far more valuable than money itself. Buffett never viewed money as a tool for impressing strangers. He viewed it as a tool for creating independence. Real wealth isn't the ability to buy everything you want. It's the ability to choose how you spend your time without being controlled by financial pressure. That idea changes the meaning of success completely. Suddenly, wealth is no longer about expensive possessions. It's about having the freedom to make better decisions. And ironically, the people who understand this often become wealthier than those who spend their lives trying to look rich. But there's one final lesson that ties everything together, and it's the same lesson that began with a single dollar. It's also the lesson that almost every new investor ignores until it's far too late. That final lesson is surprisingly simple. The first dollar you invest is never important because of its size. It's important because it changes your identity. The moment you stop seeing money as something that disappears and start seeing it as something that can work for you, you've crossed a line that most people never even notice. From that point forward, every financial decision becomes different. A purchase is no longer just a purchase. It's a choice between immediate comfort and future freedom. An investment is no longer just a number on a screen. It's another worker quietly joining your financial team. Buffett understood this long before the world called him a genius. He wasn't born with extraordinary advantages. He developed extraordinary habits, and those habits slowly produced extraordinary results. But here's what many people still misunderstand. They believe Buffett became patient because he became rich. The truth is exactly the opposite. He became rich because he learned to be patient long before wealth ever arrived. Look closely at almost every great fortune in history and you'll notice a pattern. The biggest gains rarely come from constant action. They come from making a few intelligent decisions and giving those decisions enough time to grow. Yet our modern world encourages the opposite behavior. News updates arrive every minute. Social media celebrates overnight success. Financial influencers promise life-changing returns in weeks instead of decades. It's tempting to believe that speed creates wealth because speed creates excitement. But excitement and success are not the same thing. Buffett built his career by ignoring noise that distracted everyone else. He understood that if you constantly change direction, you'll never stay on one road long enough to reach your destination. And that's exactly why discipline quietly outperforms intelligence over the long run. Imagine two people beginning their financial journey on the same day. They earn similar incomes, have similar opportunities, and live in the same economy. The first person spends years searching for the perfect investment, the perfect time, and the perfect strategy. They keep waiting for certainty before taking action. The second person starts immediately. They invest consistently, continue learning, avoid emotional decisions, and allow compounding to do its work. During the first few years, there appears to be almost no difference between them. In fact, the first person may even seem smarter because they know more theories and follow more market news. But then something remarkable begins to happen. 10 years pass, then 20. Suddenly the gap becomes enormous. One person spent years trying to predict the future. The other quietly built it. The difference wasn't talent. It wasn't luck. It wasn't even income. It was the willingness to begin before everything felt perfect. This is why Buffett has always said that the most powerful investment you can make is in yourself. Every book you read, every valuable skill you learn, every mistake you refuse to repeat increases your ability to make better decisions in the future. Knowledge compounds exactly the way money does. At first, progress feels invisible. One book doesn't change your life. One new habit doesn't make you wealthy. One investment doesn't create financial freedom. But thousands of small improvements, repeated consistently over many years, eventually produce results that seem impossible to people who only notice the finish line. They never saw the quiet discipline that came before it. So let's return to that single dollar sitting on the table. It was never really about the dollar. It was about the decision hidden behind it. One person sees something too small to matter. Another sees the first brick in a foundation that could last a lifetime. Warren Buffett chose the second way of thinking, and that choice changed everything. Not because $1 made him rich, but because it taught him to respect every opportunity, every investment, and every year that time was willing to give him. The market will rise and fall. Economies will expand and contract. Headlines will continue predicting both fortune and disaster. But the principles that built Buffett's success remain unchanged. Spend less than you earn. Invest in quality. Think independently. Stay patient when others panic. Let time become your greatest partner instead of your greatest enemy. Most people spend their entire lives searching for the secret to wealth, hoping it's hidden inside a complicated strategy that only experts understand. In reality, the secret has been sitting in plain sight all along. Wealth doesn't begin when you earn your first $1 million. It begins the moment you make your first wise decision and continue making it long after the excitement disappears. Because in the end, the greatest investment Warren Buffett ever made wasn't in a stock, a company, or even a business. It was in a way of thinking that turned ordinary decisions into extraordinary results. And perhaps the most important question isn't whether Warren Buffett could turn $1 into billions. The real question is this: what decision will you make with your very next dollar?